Hmm. Hmm. Okay, now it is. All right, can you guys see me? All right, can you guys? All right, good. Were you able to? My chat disappeared, so I don't know if you guys saw my chat before, but okay. All right. I think there might have been. I think I figured out there was a slight error that stopped everyone from seeing me. So there were a few people I think that logged in that might be in the wrong section. Gene, Gene, are you here? Gene, just checking if you're here since you were one of the people that commented earlier. All right, well, I'll start moving on. I just wanted to make sure that there was a slight problem with the broadcast. Just wanted to make sure whoever was logged in earlier is still able to see me now. Let me just check something else really fast. That's the problem. Okay. Give me 1 second, folks. Okay. All right, folks, let's move on. Let me go ahead and get started. So, just just making sure everyone who I started the stream and I had to stop it because for some reason it wasn't connecting on my end, so I couldn't actually see you guys, but you could see me. But now it's working just fine. So I just put a message for anyone who's in the other stream to jump out of that and jump into the current live stream. So hopefully they'll be able to locate it. But just in case, there you go. All right, Gene, perfect. All right, yeah, I was wondering if I lost you there, Gene. But all right, cool. We're all here. All right, let's get rolling. So let's first review what happened yesterday. Um, where's my list? Oh, sorry, I'm in the wrong view. There we go. All right. So yesterday we had a few stocks that did fairly well. One of them was IQ, simple IQ. Here it is. And as you can see there, this stock, so as you can see, that stock was pretty aggressive at the opening of the market. So here's our start of the day on the 21st. Start off low, immediately start to trend higher. I did see that fairly early in the session. So I would say by about here, we were able to locate it. So it was around 696 or so. Went to a high of about 746, so about 50 cents move. Not a huge dollar move, but pretty good for this particular stock. And then after that, turned around and sold off. So this one, you do have trading opportunities in both directions, as we know. Once the stock gets strongly outside of the VWAP channel, there is a overwhelming tendency for it to reverse if it gets very far outside. Some person asked yesterday in the webinar that I did, do I use multiple levels of the VWAP? I don't, but the reason why is because I don't want to be too specific about how far outside. I usually just judge it by how extreme it looks compared to what's around it. So if you get a move that looks really out of place compared to its surroundings, that's all I'm noticing, not exactly how far out of that channel it is. So here we had another good run after a pullback, hits the bottom of the channel, turns around, starts to come back. Then you have another sell-off after that. So the first move was the most exploitable. The second rebound, definitely to the long side, was exploitable. To the short side, somewhat, but not as much. After it got back into the channel, it's not like you had a really consistent move down. It was pretty bumpy and all over the place. And then towards the end of the day, we did have the makings of a rally here that failed. Then we had a recovery bounce that did succeed, but it didn't move very far, only about 10 cents. So IQ, good opportunity in the morning, good opportunity on the next rebound. But after that, I would say the trading was fairly inconsistent. Another great performer was PayPal. And the reason why PayPal stands out is because this is a major stock. This is not weather alert. Sorry, just wondering why I got a weather alert. So this is a major stock. So basically, we've got PayPal starting off the day at about 73.71 and moves up sharply, pulls back, moves up some more. The main thing to take away here is that yesterday the NASDAQ was mostly declining. So when you're looking at a stock and it's a major stock, not like some biotech stock or some minor stock that really doesn't get a lot of press, PayPal is a major company, right? We're all familiar with PayPal. It's been around for over 20 years. So therefore, to have a stock that's trending sharply against the rest of its peers means something. So yesterday, we realized that PayPal had a fairly strong performance because it was able to advance against the rest of the market. However, we didn't notice it early enough. So therefore, I would say that although there was a brief opportunity here, it didn't move very far. And then after that, the stock was fairly flat. So there was a very small opportunity for PayPal to be an effective trade, but after that, not much. All right, next up is Mondelez. All right, so Mondelez, the first part of the session sold off, which basically followed the rest of the market. But then turns around here and starts to go up, and this is exactly where we noticed it. So I was looking at a list of stocks that were down, but were showing signs of recovery. Now, a lot of times I prefer to look for stocks that have already been up, and Mondelez has certainly been one that's had a pretty good run. We've been able to take advantage of this multiple days, but it did sharply decline first and then starts to come back up. So at that point, this was put in front of the room. It was almost exactly where it is right there. Then after that, it just went on a pretty nice run up, going from roughly 66.21 up to 66.92. Okay, so pretty decent run. I mean, not massive, only 70 cents, but that did take it back to where it was the previous day. So full gap fill. Also, the main thing is to look at the extreme move. It's extremely far outside of the VWAP channel, but then makes a sharp reversal after that. So it was this reversal here, followed by this recovery, or I should say this turning point, followed by this recovery to move back into the channel, which was the opportunity that we saw. There are other things that I was looking at as well regarding this stock to give me an idea that this probably would be a recovery. So therefore, that was one of the reasons I put this as a strong opportunity, and hopefully you guys took advantage of it. So remember, a lot of times extreme moves, especially on stocks like this, so you can see it happen here as well. Strong move down outside of the VWAP channel leads to a sharp reversal to move back in, and then leads to an extended run. We did catch it in this situation as well. Okay. Yes, PayPal did, Gene, have strong news. PayPal had very good earnings, but since then it has slumped. But the general rule is if you're looking at stocks, buyers typically will gravitate towards any stock that seems to be priced too low, I guess, compared to its peers. So in other words, if I'm a value hunter and I already know that PayPal looks like it has a good future prospects for a price increase, value increase of the company, if I can catch it on a move down, much better than catching it on a move up. So generally speaking, this is one of the reasons I always say that you will always have buyers. Any stock that has a future, any company that might be around years to come, you will always have people wanting to buy it, and they usually want to buy it if they're an investor, an institutional grade investor. One of the primary strategies is to buy things when they believe the market has overreacted in the negative direction. So when you look at stocks as a whole, they usually move as a herd, but sometimes a stock that's actually not doing so bad as far as its numbers are concerned, its actual core business, can get caught up in the sell-off, and then investors come in and say, hey, let me buy that stock because that's looking like it's a decent value. Okay, so a lot of times that will happen. You never know exactly where they will buy, but there are ways to gauge that. And when we get into the coaching session, I'll show you how to use. I mean, obviously you don't have to have the medicine software, but this is actually one of the ways I can gauge that by looking at ratio histories and figuring out where the value points usually are in a company. So I already knew PayPal was right for that. I did mention that in the room, that it had more reasons to find buyers at that point than sellers. And that sure enough turned out. This is Mondelez, of course, we're looking at now, but for PayPal, that was the case. All right. Now moving forwards, another stock that had a good opening and then turned a corner was DraftKings. DraftKings recently has been a mover. So we had a nice move up here from the on the 21st, from the opening of the session. DraftKings just took off, topped out, and then turn around. Notice again that same pattern of a more or less extreme move outside of the channel and leads to a slowdown and eventually a reversal. And this is a very common thing. Basically, what makes a lot of these stocks look similar is if you looked at them, they all had a fairly neutral period before the run up. And then basically that set them up for potential failure later. So it's nothing wrong with taking advantage of this going up. We definitely were pointing this out as it went. But as it turned around, you also have the opportunity to sell it. The markets did turn pretty negative because yesterday when the numbers came out for, what was it? What it was. It was Flash Services PMI, yes, and Flash Manufacturing. Both of these numbers came out better than expected. And as I've mentioned, that's never going to be a good thing in the current market environment because one of the major factors pressing against the market is the fact that interest rates are rising. Interest rates rising never are positive to the markets in general, and they tend to be very impactful on technology companies. For whatever reason, technology companies usually perform worse when you have rising interest rates. So you have pressure to the negative direction from there. But as I also mentioned yesterday, you also have negative pressure from the fact that there are lots of indicators that point to the likelihood of us falling into a true recession. Now, when I say true recession, I do believe that we practically are in one now, but the idea of a recession would be consistently contracting a consistently contracting economy, not just slowing down, but an actual contraction that persists. So they can argue technically we're not in one, but obviously, if you look at home prices, et cetera, we're seeing assets values start collapsing, like used cars, which used to be not something that you would track, but in this case, it's been a thing since the pandemic that vehicles, inventory issues, et cetera, has made used cars more expensive, more in demand. But you can actually see that those prices are coming down. It's also true for newer vehicles that were in really high demand. You can see the prices are starting to drop sharply, and of course, real estate. So all those things point in one direction, that if you've got contracting values of assets that people were pouring money into, and you see larger scale property investments that were coming mostly from institutional investors, you see them scaling back dramatically or selling off inventory, makes it pretty clear which the way things are trending. Also, hiring trends, if you're seeing fewer people being hired. So, in short, the picture is, if interest rates rise, that's negative for the equities markets, but also if there's a recession imminent, then it doesn't make sense to expect the markets to rally through a recession, because even if the Federal Reserve slows down the pace of raising rates, that still doesn't change the fact that if we're truly in a recession, those companies are going to be losing value as far as their profitability. So it would still make sense that there would be negative pressure on the markets. You got basically two scenarios really that are working side by side to pressure the markets down. So what happened yesterday basically is, after the rally, when that news hit, it already put a negative, and there wasn't really anything in those numbers that suggested that things would be looking better. So naturally, stocks that were up started to sell off. And I did mention that DraftKings would almost certainly be affected by that news. So once that news was imminent, I mentioned to everyone to get out of any long positions, because most likely when the market responds, we don't know which way it's going to go, but it's not likely to be very consistent in any positive direction. It may go negative, and then after a while of a fairly muted response, then the market started to sell off. So as long as you listen to that, which I think most of you did, you should have been able to capitalize on this while you could, and then get out of the way once the news came out. We also saw a few other stocks. I'm going to rush through here. ARBE. This one started off with a gap higher. It did press to new highs. I didn't really track it as closely as I should, but I did mention at the time that you would have some opportunities based on the way it was trading to wait for it to kind of pull back, and then it would spike and pull back, then it would spike. But after a while, that discontinued and the stock flattened out. So this one would be hard. Was definitely not the easiest to trade, but if you were watching it closely, it would just have periods where it would jump, then after that, it would stop. Um, we had some other stocks that didn't do much at all. SGML. This one was a pump and dump. Had a really nice pre-market move, but once the bell rang, it immediately sold off. And I did mention that that was a good likelihood that that was going to happen. I did have a nice recovery bounce. Some of you in the coaching room did take advantage of that, but for the most part, it wasn't much after the recovery back to where it opened. So all it did was go right back to the opening price of the day, went a little bit higher, and that was it. So not bad. And then CMMB, this one also just back and forth, had a lot of stops and starts. Not really a very tradable environment, but a number of you did seem to catch the runs up. So good job on that. But overall, not the smoothest activity. So yesterday was mostly bearish action, but I would say the best stocks to have shorted, if you were short selling, were the ones that were up first. Then the news hit and they start to cascade over. Those were the best opportunities overall. Okay, here's what we got pre-market. I got a rush here since we're running short on time. First thing, economic news. We've got today the following. Where's Wednesday? Okay, today we've got FOMC meeting minutes at 2 o'clock Eastern. So, of course, that should have a significant impact on the market. And that's it. But we also have the G20 meetings right now that will also have some potential spillover into what we're doing. It is all day, so there's no predicting what will be said, when it will be said, and when it will be reported. So this will just be a wild card. We'll see what happens, but definitely we should expect some significant market action at 2 o'clock Eastern. So the morning time should be a little more congenial for consistent trading. But once those meeting minutes come out, definitely expect there to be a sharp reaction. I'll be back, of course, at 3 o'clock Eastern at that time. So there'll be 1 hour before I return that this news will come out. So make sure you're paying attention to that in the coaching room. All right. Now, as far as stocks that are moving pre-market, let me just rush through what I've got. So at the moment, SIDU, which is still under $1, did briefly poke its head above $1. It actually hit exactly $1 on the high, but so far it's still below. So I believe that's already on our list. Let me see. I think that's already on here, but okay, maybe it's not. So I'll put that back on the list. It's been on there before. I'll put SIDU on our list, our general list to keep an eye on. But as of right now, the stock is not at the price range we need. Next up is that one. I see quite a few stocks that are under $1 that are moving. But I'm not going to, unless they're really close to the mark, I'm not going to bring them up. Let's see. That one. Um, Intel looks a little active. I don't know why. Pre-market INTC. Let's see. Oh, they cut their dividend. Okay. So Intel INTC cuts their dividend by 66%. That is a pretty strong indication of what I was saying earlier, that that's not a good sign economically. If companies are cutting dividends, that means they're expecting lower profit margins. So I'll put INTC on our radar for this morning. Let's see. Next up, let's see. All right, LL. Oh, sorry, that's not the right one. Well, not, doesn't look like there are a lot of pre-market movers right now. I see a lot of smaller stocks, like under $1, as I mentioned, but those are not going to be tradable for us, so we'll have to skip those. But lots of stocks that are under our price range that are moving. Top Ships, although it's under $1, this has been a mover in the past. It's not looking like it's going to do anything right now, but I will periodically check back with it during the day to see if it starts to get active, but it doesn't look like it's going to do much now. Um, so that seems to be it. Only INTC, which is a little disappointing that they only have one stock that looks like it's really ready to move. I did see CYRN, which never is still under $1. It hasn't gotten close enough to where I would want to put it on the major list, but it has been a mover. IQ, let's see. IQ looks fairly active. It's up 9.39%. I will put that on your radar as well as a potential opportunity. And let's see if we look through our list. Tesla, that's normal. Bed Bath and Beyond, that's normal. Um, I'll see, Bill. Let me take a look at it and see. Um, these haven't traded since yesterday. I might have to clean out some of these things. All right, JFBR. Let me Maybe. Let's see. Yeah, there's a little bit of news, 27%, 3.5. Yeah, that looks good. Let's add that. Not sure why it didn't show up on my pre-market scan, but yeah, that one looks okay. JFBR looks fine. We'll definitely look at that at the open. Um, you guys see anything else? That's all I've got. So for today, looking pre-market, the Nasdaq slightly positive. It is trading above yesterday's close, but it doesn't look that impressive. Yeah, IQ is on the list already. Okay. All right. Well, we'll roll with that. I'm going to jump into the coaching room here, so I'll see you guys in just a second. But if anyone is watching this live or recast and you're not part of our program, be sure to check out fundertrading.com, our website, learn how we get people funded to trade stocks, and go from there. All right. I'll see you folks in the coaching room in just a second. Thanks.